Welcome back. A stellar performance from Chevron for 2025, including the fourth quarter, as the company saw record oil production, and that offset the pinch of lower oil prices. Joining me now is the chairman and CEO of Chevron, Mike Wirth. Mike, great to have you. Assess the year for us. Welcome.
Well, it's good to be with you, Maria. 2025 was a record year of growth, execution, and shareholder returns for us. As you said, we saw higher free cash flow by 35%, even though oil prices were down about 15%. We set production records in the United States and globally. We had our highest U.S. refinery throughput since the 1990s. We returned a record $27 billion in cash to our shareholders. Earlier this week, announced a dividend increase of 4%, our 39th year in a row, increasing the dividend, and a yield of about 4%, which is about 3 times that of the S&P 500. So our company is bigger, stronger, and better than ever, and that goes on to deliver cash flow and earnings growth well to the end of this decade and into the next.
Well, congratulations on that. And I know the company is poised to grow production even further with the most recent news around Venezuela with a reinstatement of your license there. Can you talk to us about 2026, what you're expecting? And then I want to hear some details about your plans for Venezuela, Mike.
Sure. So Venezuela is a place where we stayed. We're getting paid, and we've got a significant head start in capturing some of the longer-term potential, I think, that exists in the country. We've been there for most of the last 100 years. We've been an important partner in the development and growth of Venezuela. We're being repaid debt that we're owed, and others that have left have had more difficulty with that. And we've grown our production over the last couple of years from 50,000 barrels a day to 250,000, so 5x. And over the next 18 to 24 months, we see the potential to grow by another 50%. It'll require some additional authorizations from the U.S. government, and we're looking at other opportunities in the country. And so it's a valuable resource option for the future in our portfolio. We stay focused on safe and reliable operations, and we're optimistic that things are moving in a better direction.
Well, that was incredible when the Trump administration took down Nicolas Maduro. You knew that everything was about to change when that happened. What kind of an opportunity are you talking about? What will this represent in terms of your overall capacity?
Well, as I said earlier, on a 100% basis, the ventures that we participate in there produce about 250,000 barrels a day of oil. That's about 100,000 per day to us. So we produce 4 million barrels globally. So you can see it's relatively small within the scheme of our company, 1 to 2% of our cash from operations. But it has tremendous potential. It's a country with the largest petroleum resource in the world, including all the big Middle Eastern countries, the United States, Canada. Venezuela has more oil and gas than any of those countries. And so there are many decades of opportunity that lie ahead of us. The type of oil is one that is highly sought after by U.S. refiners along the Gulf Coast. And so the potential to grow, Venezuela was producing over 3 million barrels a day a couple of decades ago. The opportunity for it to begin to move back up to higher levels is very real. And so we see it as a long-term play, as all things in our industry. As with all other parts of our business, we look at security, we look at contract terms, the rule of law, and as we make investment decisions, things will need to compete versus our alternatives. But we believe that the U.S. government and the Venezuelan government are taking steps to ensure that that happens.
And I'm glad you mentioned this is a long-term story, because you're putting money into the ground and resources when you're doing these projects, and these are very, very long-term. Talk to us about that, because there was some worry that when oil prices go lower, oil companies pull back. You're not making the same money that you would make at $85 a barrel when you're talking about prices at 60 or below 60.
Yeah, and so I like to tell people that, the price we see looking out the window today doesn't really influence our investment decisions. It's the price we see when we look down the road. And so we tend not to move our investment up and down with today's oil price. We take a long-term view on supply, demand, technology, competition, regulation, and develop a range of price forecasts, and that's what we use to test our investments. Most of our portfolio are large projects that have lifespans measured in decades, sometimes even centuries, and so today's oil price is not particularly relevant to that. Some of our shorter cycle things, like shale in the U.S., you'll see from time to time when we go through an event like COVID, we can slow things down there, but we tend not to do that across most of our business.
Let me get your take on scaling up even further. You've had some incredible acquisitions over the years, and a lot of people are talking about large-scale M&A, expensive large-scale M&A, perhaps continuing in the year ahead. What do you want to say about that? There were some media reports that the company is interested in Lukoil's international assets.
Yeah, you know, it's really hard to predict these things, Maria. We don't talk about commercial matters, including M&A or asset acquisitions, so I can't really speculate on that. But in a resource business where every year we produce, you know, now close to 1.5 billion barrels, you need to continue to replenish your portfolio. We do that through exploration and finding new reserves in the world. We do it through using technology to unlock resource that we have today but isn't economic to produce, and we develop new technologies to do that. And then, of course, we do use acquisitions to bring resource into the portfolio. So over time, all of those have contributed, and I expect in the future will continue to do so. But when and how transactions like that occur is really, difficult to forecast.
What do you want to say about the Hess deal, which, of course, was incredibly successful? Is that now providing the growth that you expected?
Well, it certainly took us a while to get there. We're very pleased with the outcome. We've increased the synergy commitment from $1 billion a year to $1.5 billion a year. We've already captured the first $1 billion and expect to capture the next $500 million very quickly. We're seeing good performance in all the assets that we acquired. The thing that I'm most excited about are the great people of Hess that have joined our company. We've got leaders in key senior positions and a lot of people throughout the organization that bring different experience, different perspectives, and talent to our company, which is making us stronger. And I'm seeing that every single day. So we're very, very pleased with the transaction.
And Mike, in the past, we've talked about ensuring that some of the president's executive orders are codified and in place for the long term to actually meet your long-term goals and the industry's long-term goals. Where are we on that in terms of permitting? Have things become easier? I mean, it's a new day, obviously, with the Trump administration when it comes to energy. But what can you tell us about the permitting process today?
Well, I think the things that can be done administratively have been addressed. Secretary Burgum and the Department of Interior, for instance, who we deal with a lot, have simplified the process, streamlined some of the red tape out of it. We see actions by other agencies to do the same kinds of things. Now, a subsequent administration could reverse some of those practices. And so the real solution here, and it's not just for our industry, it's for the renewables industry, it's more broadly to build infrastructure in this country, which I think there's general agreement that would be beneficial to our economy. We need to have durable permitting reform that allows people to develop projects, have appropriate review and oversight, and then get on with construction and investing in our economy. There has been some progress made on bills that are beginning to move through Congress. It's been difficult. Congress is polarized, and it's been difficult to find things that can bring both parties together. This is one that I remain hopeful can bring both parties together, and we've seen some progress, but we don't have a bill that's actually moving through the House and the Senate yet. So I think that remains an important thing for businesses across our economy to weigh in on and support.
Mike, we were so pleased to be with you in the Permian Basin last year. We appreciate your team taking us on the oil rig. Talk to us a little about the potential for the Permian going forward and that contribution to cash flow.
Well, the Permian is a tremendous asset for our company and for our country. As you saw when you were out there, it's a vast expanse. It's an area that has over geologic history, a lot of hydrocarbon resource to be developed, and we now have the technology in order to do it. If you go back a decade or so, we were barely producing 100,000 barrels a day there. Today, we're over 1 million barrels a day. We're still only recovering about 10% of the molecules that are actually trapped in the rock beneath the ground. So 90% of them are still there waiting for us to develop the technologies, as I mentioned earlier, to unlock that resource. We're working hard on that right now with different ways to break up the rock so those molecules can flow, different chemicals we can use that reduce some of the tendency for the molecules to stick to the rock so they'll flow more easily. And I think that the Permian Basin is going to be an underpinning of the U.S. economy for many decades to come.
Yeah, I mean, when I was there, I noticed that there was some flaring up of some natural gas. And I wondered, is that because we don't have the infrastructure in place to actually deliver the natural gas where it needs to go for electricity needs? Because we need so much electricity right now with that AI boom.
Yeah, certainly our company does not flare as a routine matter of business. In a safety situation, that can happen, but that's what flares are designed for. I think that the broader point that the amount of gas that's being produced out there is important for our economy is a good one. You see liquefied natural gas facilities being built along the Gulf Coast to export to markets around the world, including to our allies in Europe. That's important. What we're increasingly seeing now, and our company is certainly involved in, is using that tremendous resource to help support the race to lead in AI. And as data centers need more and more electricity, as we're seeing pressure on the grid and electricity prices, we're working to build a data center park or an energy park that's not connected to the grid, so the costs don't flow to all consumers, but it's built in West Texas, and it will support hyperscaler data centers as they build these up to really unprecedented levels as AI continues to advance. And so this is another advantage where you can convert energy into intelligence, and the abundance of energy that this country has can translate not only into energy dominance, but into AI dominance.
In terms of AI, I was happy to go to your lab and to see what kind of data you're collecting. Mike, what's most important for you in terms of all the data you collect to implement AI as best as possible?
Well, we think about it in kind of three categories. One is to get these new tools in the hands of all our employees. And it's amazing what smart people can do when they have new tools. They're very creative and innovative, and they can make their work better, and they can work faster and smarter, and you don't need to give them a lot of instruction. The second one is our work processes around the world involve a lot of handoffs, a lot of information, and they were developed back in an analog or even pre-analog time. And as we look at these tools today, we can automate, simplify, and accelerate many of our work processes using agents and artificial intelligence. And that allows us to be more productive, to work faster, to reduce costs. And then the third bucket are what we term moonshots. So these are big game-changing projects that could really fundamentally transform how we do our business, how we look for and discover oil and gas in the ground, how we optimize our flows of products out into markets. And so we're dedicating significant resources to fundamentally looking at some of the big drivers of value and competitive advantage to see if these tools can be used to help us even further create value for shareholders. So it's an exciting time. We've never seen technology advance as rapidly as it is today. And I think the applications in large industrial operations where you have lots and lots of data are going to be tremendous.
Yeah, really, so fascinating. Mike, what does all of this mean for CapEx spending? Give us a sense of what your plans are for 2026.
Yeah, we've outlined a range of $18 to $21 billion that we intend to stay within. We can do that and still continue to provide a 10% annual growth rate in free cash flow at constant prices, at a $70 price out to 2030. From last year to the end of this year, we intend to grow free cash flow by $12.5 billion. Part of that is investing in good projects. Part of that is remaining very disciplined with capital. And so we have a large set of opportunities that we could invest in. We'll only invest in the best of those and remain very disciplined with capital, which is important in our industry. It's capital intensive. We need to generate strong returns out of that. And our commitment to disciplined capital deployment is something that's fundamental to our company.
Absolutely. And what can you tell us about the gas to power project?
The gas to power project is advancing very well. We've got a site in West Texas that can take advantage of our large gas resources. It can extend our natural gas value chain. We're one of the largest producers in the U.S., over 3 billion cubic feet per day. We currently operate more than 5 gigawatts of reliable power around the world to support LNG facilities and other complex operations that don't have access to the grid. We've got a site secured. We've got permits submitted. Equipment is secured. Engineering is underway. Customer discussions underway with the largest companies in the world, the big hyperscalers that have aspirations to grow multi-gigawatt scale data centers. We expect to announce something with a customer later this year. So it'll have to meet our investment hurdles, but everything we see today suggests that it will. So stay tuned. We're very excited about this.
What an incredible digital transformation, growth story, exploration growth story. Mike, is this partly a function of the global economy doing better? How would you assess the U.S. economy and the global economy right now, Mike?
I think we continue to see growth. And despite some of the predictions that growth was going to slow, demand for oil and gas last year was an all-time record. It will grow again this year to a new all-time record. And economic growth in the U.S. is robust. I think as we get into this year and we see some of the effects of the tax bill flow through, that will continue to support economic growth. And similarly, around the world, it can be a little different in some regions, but overall, global economic growth is healthy.
And you told the analysts at that last analyst day that the company is accelerating its exploration strategy with a 50% increase in its capital budget. You talked about entering 10 new basins and increased acreage by 50% over the past 2 years, double peers.
Exploration is fundamental to continuing to bring resource into our portfolio. We do have 10 new frontier basin positions in areas that are not proven hydrocarbon provinces. This is akin to wildcatting, and so we will be exploring for oil in places where it's not been found. We'll continue to explore in areas where there are large proven systems where we may have existing infrastructure, and it makes it more economic and shortens the cycle time to develop those resources when you find them. But as we look at these new technologies, including AI, and what they can do to help us see things that we couldn't see before, we use 3D and now 4D seismic imaging to understand the subsurface. We intend to increase our activity and our spending in exploration with the expectation of finding the energy that's going to continue to power the world for many decades into the future.
That is amazing. And I know you highlighted one of the most exciting applications in the shale and type business where you talked about the Apollo AI machine learning based projects, all the tools that you're using there.
We've got a tremendous amount of data. We've got thousands and thousands of wells. We've got operations to spread across, 2 states, and understanding how to continue to develop that in a way that's very efficient, that avoids interference between adjacent wells and activity going on there, optimizing the development program, optimizing every aspect of our operations to maximize uptime or reduce downtime is tailor-made for these AI systems that get stronger the more data that you feed them. And we have massive amounts of data in the Permian Basin that as that goes into these models and the models ingest it, they can work faster than the human brain can. They can see things that are difficult for people to see. They can work 24 hours a day and give us the ability to optimize that development in a way that generates strong returns and performance that we've never had before. And so we're very excited about that.
Are there also new opportunities right now onshore in Iraq?
We have been in discussions in Iraq with the government. We've actually signed an agreement to take a look at some exploration acreage there. We've been involved in discussions on some other fields that are already producing. We don't have any deals to announce yet, but it's a country that is blessed with tremendous resource. The terms over the last decade and a half or so have not been very competitive with other places where we could invest. And so the ability to generate a return on investment hasn't been attractive enough for us to go into the country. That's beginning to change. And I think Iraq has recognized it needs to compete against other countries around the world. And we're seeing positive moves in the fiscal regime that make it more attractive to us to potentially invest.
Thanks so much for joining us. Good to see you.
Always good to be with you, Maria.
All right. Thanks very much. Chevron CEO Mike Wirth. We'll be right back.